What is up, everybody? Coltyn Simmons here with the one and only Tye Prince with Fairway Mortgage. So one of the things we've been asked a lot is, hey, what does it take to buy a house? Well, a lot of times if you're not paying cash, it takes a loan. So the financial responsibility of purchasing a home has increased since the 2007, we all know what happened. And so a lot of people talk about crashes and this and that. Well, there's some loan programs going on right now that, you know what? They actually check to make sure you can afford the house. So we're here today with Tye. We're gonna talk about the three main loan programs that most consumers are taking and just talk a little bit about those loans. And then we'll do another video about what it takes to qualify for those loans. So for today, we're gonna talk about the three main loans, the pros and cons, and what you might fit into. So Tye, what are the three main loans that consumers are using today?
Yeah, thanks for having me, Coltyn. Hey, everybody. My name is Tye Prince with Fairway Independent Mortgage. And basically, to answer your question, we have conventional mortgage, FHA, and VA mortgage. Those are the three most common loan types. There are a bunch of other programs out there, but those are the three that are most often referred to when you discuss financing.
Okay, all right. Talk to us a little bit about the FHA financing. Because I mean, that's what I see a lot of. I would say it's about 60 to 70% of the deals that our agents are doing. So talk to us a little bit about FHA. What does that even mean?
Sure, so an FHA mortgage is typically misconstrued as a first-time homebuyer mortgage. What it actually is a mortgage for people with a little bit lower down payment amount saved up, a little bit lower credit scores, and it allows typically your first-time home buyer to get into a home with less than the 20% that is what's traditionally referred to for the down payment.
All right, so tell me a little bit about the pros and cons of the FHA loan.
Sure. So an FHA mortgage does require what's known as mortgage insurance. That is a monthly premium that's added on to the cost of the mortgage payment, and it does last for the life of the loan. That is one of the cons of the loan, if you will. The pros, it does allow you to get in to a home for a little bit less money out of pocket, and it is a little bit more lax on the requirements to get qualified, whereas a traditional conventional mortgage does require a little bit larger down payment, a little bit higher credit scores. FHA kind of opens the door for more people to get into homes sooner.
Got it. So let's talk a little bit then about the conventional loan. What are some pros and cons that you see with the conventional loan?
Sure. So with a conventional mortgage, we can go as low as 3% on the down payment, but more often than not, clients will bring between 5% and 20% for down payment. The pro of a conventional mortgage, the rates are competitive, but the mortgage insurance, once you hit that 20% down payment mark or you have 20% equity in the home, the mortgage insurance can be removed from the payment, which lowers your overall payment compared to an FHA mortgage.
All right, so tell me a little bit about the actual maximum loan amounts for the FHA and the conventional and the difference between those two.
Sure. So traditionally, every year, the loan limits adjust based on the market, the previous year's performance. So right now, well, not right now, but in January, the FHA loan limit is gonna go up to about $420,000, which means you can purchase a home slightly above that with a minimal 3.5% down payment. Conventional mortgages actually are allowing you to go up to $647 and change now, which basically opens the door to quite a few homes in this market.
Wow. Okay. All right, cool. You know, one of the misconceptions that I've seen is that when people think about FHA mortgages, conventional mortgages, the first thought that comes to mind is buying a home, but you can actually buy multifamily with these loans, can't you?
Yeah, absolutely. One of the things that most people don't really know about, with an FHA mortgage, you can buy a duplex, a triplex, or even a fourplex and use one of the units as your primary residence. With that FHA program, you are kind of buying your first investment property with as little as 3.5% down. you have the tenants in the other 3 units that could be paying most of your mortgage payment for you basically when you're collecting the rents every month. So for your first time buyer, somebody who doesn't currently own a home, that's a great option to get into becoming a landlord, if you will.
Yeah, I know a lot of people looking to get into investing, and one of the best ways to do it is buy 4 units, let somebody pay the other 3, and you basically live rent-free, and you now start to build wealth, which is pretty cool. So lastly, I know there's a lot of veterans out there, so tell us a little bit about the VA loan program, and some of the caveats to that, some of the pros and cons of that.
Sure. So one of the best programs out there is going to be for any of our armed service veterans and active duty members. There are qualifications that kind of vary depending on the type of service you have, the type of discharge, but for general purposes, they allow 0 down to purchase a home. You can come out of pocket with 0 down payment.
Wow.
The only thing you would traditionally have to pay is closing costs, which will vary a little bit depending on what property you pick, but they offer super low interest rates. They're very competitive. There is no monthly mortgage insurance on a VA loan. So not only do you have the super low rates, you also don't have to have that added expense of mortgage insurance.
Wow.
One of the nice things about VA loans, we go down as low as a 580 credit score on VA loans currently at Fairway, and the debt to income ratio, we take a little bit more into account when we're doing the math, as far as it's not just a hard line, you have to be under X number. We take into account a lot of things like the utilities on the property, how much money you have left over at the end of the month once you pay those bills, and it actually lets people qualify for a significantly larger amount of home using a VA loan than they would, say, an FHA or conventional. Also, there are no loan limits on VA loans. So you can purchase $1 million house if you wanted to using your VA loan, assuming you qualify for a mortgage that high.
Wow. So, I mean, it would actually make, as a veteran, if you were a veteran, it would make no sense to actually rent a home, because you would have to come out of pocket your first and last months or some type of deposit. So you're talking about coming out of pocket thousands of dollars just to rent a home, where depending on your discharge or what have you, you could literally sometimes, and if your agent negotiates some closing costs, you could get into a home as a veteran with $0 out of pocket, which is, I mean, the reason why the program exists, right, is to benefit our veterans. So I wish I saw more veterans taking advantage of that. And in the market, there's a lot of misconceptions of the VA. And I see a lot of realtors saying, we are not accepting VA loans, which for me is actually disrespectful to our veterans. And it tells me that that agent really isn't educated on the VA loan program, because me personally, I'm perfectly happy with accepting a VA loan, because I know that they're actually a little more flexible than some of the loan programs out there. And I know you and I have done some, and you have the ability of getting creative to make sure that that veteran gets that home. So I love the VA program. And if you have an agent or somebody telling you that that's not a good route to go, give us a call, because we'd love to talk to you about that loan program. Now, let's just say that I was getting ready to buy a $3 million home, right? And that person calls their realtor and says, hey, I want to buy this house. Where do I start? The first place I always tell every single one of my clients, the first place to start is with our lender, because that's really going to guide us down the path we need to go to home ownership. So the first thing that I would tell them to do is reach out to you. Now, this is a $3 million buyer, right? So what are some of the things that, whether he's a $3 million buyer or a $300,000 buyer, what are some of the things that right before you purchase, you got to have in mind that you're going to need to provide in order to start the process?
Yeah, absolutely. The process is pretty much the same. Like you said, $300,000 down to $100,000, and it doesn't really matter. The process is the same across the board. The first thing we need to do is check your credit. Before we do that, we need to have a conversation, kind of discuss what you're looking to do with this mortgage process. If you're looking to buy an investment property or a vacation home, the process is a little bit different depending on the type of home you're trying to buy.
Okay.
But for the most part, you would visit my website, fill out a quick application, answer a few questions. Once that goes through, we pull your credit, analyze all of the information in the application. And then while we're working on that, you're collecting some documents and then you're going to upload those to our website so that we can verify the information that you put in the application and make sure it matches on paper. So your pay stubs, W-2s, things like those, bank statements, we're going to review all of that documentation and make sure it lines up with the information on the application.
Yeah. So, I mean, it may sound actually like, because I know a lot of people like think it's an overwhelming process, but here's the good thing, all right? We're gonna tell you in a second why it's actually very easy and you can be approved for a home loan in less than 48 hours. It's that fast. So stay tuned, check out our next video. We'll tell you how it's simple. Let's go shopping.